Good morning. My name is Ian Farmer. I'm the Executive Chair of South Harz Potash, and we have a suite of mineral rights in Thuringia in Germany. And on Monday of this week, we announced a scoping study on our first project, which displayed compelling economics to build a 1 million tonne per annum potash mine in that region. Thuringia is an area that has an historical track record of mine production of potash over the last 100 years, and we're fairly excited about the prospects of developing that project.
Ian, thanks for coming on the show. It's the first time we've met or spoken, so I do appreciate that you've joined us. Potash. I think there are great hypes from the likes of people like BHP 2 years ago saying this is the way forward. The market has also, I think, benefited from the Russia-Ukraine situation, Belarus situation, who are kind of big producers in the space as far as we know. Are you just jumping on the bandwagon, taking advantage of that situation, or have you been at this a while? I mean, when did this all kick off?
Well, the original mineral rights that we own were acquired in 2017, so some 5 years or so back. We acquired the mineral rights from the German state and through a tender process. They came with the results of some 300 boreholes. So we knew more or less what was under the ground when we acquired the rights. And we spent the last couple of years putting together an inferred resource on that geographical area. And part of that's now been upgraded to indicated, on which the scoping study has been based. The market itself has changed dramatically in the last 18 months in particular, and indeed the potash price has trebled probably over that time frame. I think the first spurt of energy came from the emergence of the world from the COVID period and food security coming on the radar screen for the first time, and the demand for fertilizer pushing the price up from $300 to $590 being the contracted price in February of this year. Then, of course, you had the Ukrainian and the Russian conflict, which has propelled it to new heights. So we're currently seeing spot prices of between $900 and $1,000. And the big question for us, of course, is where will the price settle in 5 years' time when we're a producing mine? The long-term price from here will probably settle somewhat lower than $1,000, but will it ever go back to the kind of $300 mark that we've seen historically? Our view is not. Our view is that there has been a sort of fundamental shift in pricing, and that you should see prices, long-term prices, that is, settling some 10 to 15% ahead of where they were.
Right. So you reference the BHP Jansen project in your presentation. It's of a certain scale, so we're going to require a lot of capex. But you, through your scoping study, know what about your site? What are the data that we should be looking at? Because you're indicating it could be quite significant.
I think an important factor with potash is location. This is a bulk commodity. It's expensive to transport, and there's lots of CO2 associated with that transport. We'll be producing in Central Europe, and Europe is a net importer of potash. So we'll be supplying into a market that is in deficit. To fill that deficit from Canada is expensive in terms of transport and CO2. So we're ideally placed to pick up some of that market deficit, and that's where we'll be supplying into. And the last factor, of course, is that countries these days are looking to be self-sufficient in terms of strategic supply of raw materials, like, for example, the ingredients in fertilizer. So I think that you can expect Europe to want to be a lot more supportive than perhaps historically has been the case, as the globalization of the past starts to be re-examined in a strategic context. I think local supply will become something that is encouraged and indeed supported.
Okay, and so right, that's a nice sort of overview of the story. Can I sort of bring it back a little bit, because as I say, first time I've met or spoken to you. Can you give me a little bit of background on yourself, and then perhaps some of the active member of the team?
Yeah, I'm currently acting chair. We are searching for a new chief executive as we speak. My background is I was chief executive of Lonmin, the platinum mining company, for a number of years. I now do non-exec work generally. So we are looking for a new chief executive. We have within our team potash expertise. A chief operating officer has tried and tested and steeped in the industry. He's obviously been the mainstay of producing the scoping study we produced. But we are a fairly small team. Up until recently, we were largely a virtual company. staff living in different places and keeping the overheads as low as possible. But we have recently opened a regional office in Erfurt, which is the town in Germany closest to where our operations will be. And we've employed a regional director to run that office. Our regional director is an ex-politician with an environmental background, a lady called Dr. Babette Winter, and she's taken over the running of the day-to-day operations in the region and will lead permitting and environmental issues and social issues for the company.
Right. And so what happened to the previous person? Why are you looking for someone new?
Yeah, the previous chief executive parted company with us back in May of this year.
Right. Okay. Because that what they got another position that they wanted, or was it a case of change of strategy?
It was a decision the company took to move on to find somebody better placed to take the company forward. He didn't have the right attributes, we felt at that time, to take us through the next phase of our strategy. And indeed, we wanted somebody prepared to spend the lion's share of their time in Germany, which he was not. So that was the driving force.
Okay, fair enough. Right, so you kind of laid out the team, and you're kind of upgrading the team, as it were, getting people in country. All good news. Can you just talk to me about what the plan? We've talked about the market more broadly, but producing in Germany into European ecosystem, which is a net importer. How do you go about that? Because from where you are today to getting into production, there's obviously lots of hurdles that you've got to get over. But once you've done that, how do you sell directly into the market? And whatever the price is, do you sell directly, or do you need to go through a third party? Is it wholesale? How does it work?
Well, I think first of all, just to put some timeframes around your question, to complete the study that we have to do and to complete the permitting work is going to take 2.5 to 3 years to do. Then, of course, you've got a build phase where you've got to sink a shaft and build new plants. That takes another couple of years to complete. So being able to market our product and design a marketing program, if you like, is some 5 years away. So we have plenty of time to examine the options around how that works. And at this stage, we are completely uncommitted. We have no offtake arrangements. We have no financial commitments to anybody. We've deliberately left things as open as possible because those are very valuable attributes, if you like, of potential financing structures. So we've got plenty of time to explore all those options as we move forward.
But do you need again? I think it's if we're talking like precious metals or uranium or battery metals, you can sort of understand. I think most people they're bigger markets, so people understand how they work a bit. So for something like this, how do you get your financing in place if you don't have contracts or agreements in place or over what the financing could be? I mean, how does that work?
Well, first of all, in terms of the customer base, all the options around direct selling to consumers of potash or to traders, all those options are open to us, and we can explore those, as I said earlier. In terms of financing, yes, you're right. I mean, when you produce your bankable technical study and you try and raise finance, financiers will want to see that there is a ready market for the product. The product we're actually making is a bog standard MOP product. It's not a complicated or technical thing. It's a sort of it's not an exotic in any way whatsoever. So being able to sort of understand that there is a market for it, I think is fairly easy. The extent to which we have to contract, if you like, or to have an offtake arrangement or indeed a marketing arrangement with a counterparty is something we haven't yet explored. If we need to do that to get the financing over the line, we'll cross that bridge when we get to it. Right.
Okay. And in terms of the size of them, because again, when we started looking at this sector, 4 years ago, it seemed like quite a kind of closed cabal-like environment where there were some big players, obviously Russians, Belarusians as well, and as well as some others. You kind of control the pricing to a degree, but also the kind of distribution. So again, has that environment changed somewhat? And how do you and I know it's early days in the scoping, but manufacturers like being undercut, or distributors preferring to distribute other people's material?
As you say, this is an industry where some 30% of material comes from Belarus and Russia, and another 30% comes out of Canada. So those two big blocks are very influential in terms of global pricing. I think that Russia and Belarus have become tainted or persona non grata to many European suppliers, particularly referring back to the comment I made earlier about wanting strategic, secure sources of supply from friendly nations. So I think that gives us a marketing advantage within our domestic market that the Russians and Belarusians will never be able to compete with going that way. And I think on the Canadian side, yes, there is surplus capacity in Canada, and of course with Jansen coming on stream, that's going to exacerbate that overcapacity issue. But to get potash all the way from Saskatchewan to the port on the western coast of the Americas, and then transported all the way through Panama, all the way to Europe, is a very expensive process, and very expensive in terms of CO2. So I think that as a preferential supplier, we will definitely have the march on our competition in Europe itself. And the second point, obviously, is one needs to be a low-cost producer. When you're selling into a competitive environment where there are oligopolistic characteristics, you need to be near the bottom of the cost curve. And the scoping study shows that our cost of production at a byproduct credits is at the fairly low end of the cost curve. So that gives us some protection against somebody squeezing price deliberately to make new entrants suffer.
Is that the USP for you in terms of being a lowest quartile cost producer? Because we've seen Russia weaponize gas and oil, and it's been talked about for years, but Europe's steadily ignored that. It's now in a position where it actually has to start thinking of itself, producing for itself, and coming up with solutions. I guess you're saying you're in a similar position to take advantage of the fact that Europeans are saying, well, we need to become more self-sufficient and self-dependent on, and then in this case, potash. But price has a funny way of affecting the way that materials flow, globally, and it become price is really, really important in that. So you think because of what you hope your costs will be and your margins will be, you are defensible in that sense?
Yeah, I mean, I guess what you're saying is that market prices in different geographies do differ slightly, but the overall global supply-demand balance is a factor one can't ignore. So what I'm saying is, in extremis, should the oligopoly try to squeeze out the smaller players and push the price down to $250 where it was a couple of years ago, we would still be profitable at those levels. Our unit cost of production on our scoping study numbers is $93 a ton, which is well below where the average Canadian position is and where the average Russian Belarusian position is. So I think that it would be very painful for them to squeeze things down to that level themselves, and therefore unlikely that they would go to that extreme. Particularly, a 1 million ton producer in Europe who's selling domestically, I don't think is a huge threat to them.
Right. Okay. And let's talk about that. So I just want to continue with the market stuff, because it's like for most people looking in, potash is not something that perhaps they've considered or understand enough to get involved. You're about 45-50 million Aussie company with an asset in Europe. You're well followed in that sense in Australia. Do you think that you need another listing because you're kind of the European folk? We've seen a few Aussie companies come and list in the UK just on AIM or even Frankfurt, just to kind of catch the attention of funders over here and investors over here.
I think the positioning the company where it's able to raise the funds to build the mine is going to be a 2 or 3 year journey that we're embarking upon to build the market cap of the company gradually over time. And to widen the shareholder register, perhaps bring in strategic partners along the journey. I think that listing the company in London is part of that process. We are a European asset. There's no doubt that a large chunk of the funds to build a new mine would come from European sources, maybe even development finance out of Europe, who knows. and having a listing in London will be clearly beneficial. London tends to be a market that doesn't follow pure exploration particularly closely, but it is very good for raising finance for development. So I think as we get closer to development timeframe, it'll become more and more relevant that we have a UK following or a European following and a listing most likely on AIM. So over the next 2.5 years or so, you should expect to see us go down that path. Timing, however, is obviously important. And it's expensive for an Australian junior to list here. So the cost-benefit threshold has to be crossed before we'll put it on the radar screen. But I think it's something that is sensible for us to do at the right time, yes.
Right, okay. And the other thing that Australian companies tend to do when they have a European asset is they start exploring the various funds, tax incentives, as well, provided by the relevant government, whether that be federal or more local. You mentioned you've got a lady who's joined you, ex-politician. Is that part of her remit, trying to understand what funds may be available to you?
Together with the Chief Financial Officer, yes. The two of them need to explore what avenues of funding might be available out of the European system as a whole. And that's something we'll look at in the fullness of time, yes.
Right. And how is Germany with regards to, I know you've talked about 100 years worth of mining in Germany, but not a whole bunch of new stuff coming on tap. I guess given the nature of it, it's slightly more green credentials. So are they enthusiastic? Are they welcoming? Are they helping you in any way?
That's very interesting. Thuringia is a state which has a mining history. The old GDR was one of the world's biggest producers of potash up until unification. On unification, those mines were deemed to be overmanned, undercapitalized, and not commercially viable at the time. And a number of them were closed with quite significant social consequences at the time. So there is still a legacy in the community and in the fabric of that area, where mining is very much an accepted industry. And all the conversations we've had with local politicians and with local counterparties in the social context have all been extremely supportive, actually. And it's been very welcoming. So there's no doubt that permitting is going to be extremely diligently adjudicated by the German authorities. It's the Thuringian state that has to provide the license, not the federal state. And I believe the political background, if you like, to mining and the need for self-sufficiency and certain critical resources will provide the right political climate, if you like, for a positive approval, because we have local support and hopefully we have national support from a strategic perspective as well. We've had no pushback, no complications, but the environmental issues in particular will be centre stage. And we have said publicly that we will build a mine which puts all the backfill back underground. There's no permanent stockpiles on surface. And we have said publicly that we will not discharge any water into the water system. And historically, those are the two social complaints about mining were the mine dumps that were left over after mines were finished and water discharges that polluted the local water table. So those two assurances we will have to give, yes. Okay, so do you think you're kind of getting a free pass because of the nature of what you're mining? It's the word mining that I think is the most evocative. And Germany has got a lot of NGOs financing a lot of anti-mining activities elsewhere in the world. So I guess it's a path you've got to steer and navigate quite carefully, but that, because of the nature of what it is that you're doing, and you're talking about rehabilitation and obviously mindful of the water situation, you feel that this is an environment which you're welcome, for sure. The messaging we're getting so far is encouraging. And we are also, just to explain, we are sinking a vertical shaft here, which has a very small footprint on surface, and building a plant which is like a small factory. So there are a number of shafts already in the area, which were there from the previous times, some of which are still operational and working in a small way. So the sort of the sleight of headgear around the vicinity is not an unusual sight. And we're not doing anything that sort of would be out of context with the area we're working in. Indeed, there is also area around the Ongeberger site that have already got industrial classification from a land use point of view. So using land that's already classified as industrial or indeed has a history of mining in itself should help with the permitting process. It doesn't obviously give you a green tick in the box straight away, but it's a lot easier to explain, why you want to do something if the zoning is already conducive to that kind of activity.
Right. Okay. So we've kind of dealt with. I just need to buy into the thesis firstly. So you've answered quite a few questions for us today on that one. So you obviously, we talked about the scoping study where you are today. There's a runway through to production. So what are the kind of hurdles, as it were, or the kind of, I guess, catalyst is a word people like to use, between now and getting into production, which you're mindful of addressing?
Yeah, what we've done is we've looked in some detail at the permitting process in Germany, how it works. That there are two key steps. The first one being the site location, and do the authorities agree that you should build your operations on that site, and what are the consequences for the social community and the environment of that site decision. That's the first hurdle we have to cross. So choosing the site and going through that approval process for site location is going to take between 12 and 18 months to complete. The next step beyond that is to put forward what they call a general operating plan, which is basically a full mining plan explaining what you're building, what it entails, how it works, what the volumes are, and how the waste is treated, etc. That also requires a full environmental impact study. So the environmental impact study needs to be kicked off, because gathering the data that supports that application needs a full 12-month cycle as you monitor through the seasons the various fauna and flora that need to be looked at to make sure you don't have an impact on them. So there's probably 18 months worth of fairly detailed work in terms of site location, approval, completing our PFS, and putting in our general operating plan. Those are the immediate hurdles we have to navigate. And what we've done is designed our own internal work to make sure it dovetails the permitting process to try and optimize the outcome and speed of permitting approval.
Okay, so as far as you're concerned, that's the big hurdle for you, not the potential size of the capex required, given the scale of the opportunity in front of you, right? And as let's go $45-50 million company today, you're going to need to show that growth profile, that growth potential, for people to believe that this thing can get funded without, significantly diluting your shareholders, right? So what are the things that you need to do to deliver to that side of the equation to give people the sense that this thing is entirely possible by a company of your size?
As you would expect, all these things have to happen in parallel. You've got to have a project that's on the right pathway to getting permits to proceed. At the same time, you have to work on the financing thereof. And as you said earlier, you're not going to get financing until you've got a bankable study with a home for your products and all those good things that financiers will look to. So all that work has to happen in parallel, and we will do so. I use the word, that's a journey that we need to progress down. There are a number of alternatives we need to explore. The use of offtake contracts, the use of royalty financing, bringing in strategic partners, listing in London. All those options have to be evaluated and looked at. And as you said earlier in your introductory question, which one of those gives the best value outcome for shareholders, doesn't end up in material dilution. So we're on that journey at the moment. I haven't got an answer for which of those, which formula out of those options is going to provide the best solution. But for me, the numbers in the study speak for themselves. If you've got an asset which has a net present value of well over $1 billion with an IRR of 26%, those numbers are based on pretty conservative underlying assumptions. This is a project that's going to get built. Finding out which is the right magic formula to finance it is something that we need to apply our minds to over the next 2 years as we go down that journey.
Right, and so I'm going to hone in one particular aspect of what you just said, which is strategic partner, because strategic partners means different things to different people. And I guess you'll tell me, you're on a journey. There are lots of options available to you, but in a closed market like this, in a small market like this, there's only a few players who perhaps have got the balance sheet to get involved, and they may have other things on the plate, which kind of makes the university. Some of them may have other things on their plate, which makes the university even smaller. So, what are the questions that you think you need to answer for yourself to try and understand the potential for bringing in a strategic partner, and in what sense would you like them to come on board? Because obviously coming in at Pubco might be, I say, dilutive. So how do you approach the asset or funding the asset via a strategic partner?
My view is that what we would call a strategic investor or a cornerstone investor would be ideal. Somebody who comes in at top level and prepared to invest a reasonable amount of the money up front, but is also buys into the medium-term plan of the company to take us through to that build decision ultimately. Be that a private equity fund, be that a corporate of some sort that has some vested interest in the space. There are parties like that out there, and we need to go and have the right conversations and see if we can interest them. Now we have a scoping study that is possible. It wasn't possible when you had no numbers to put on the table. So a strategic investor of that sort would be ideal. Personally, I'm not in favor of bringing in partners at project level because we have several projects. The Omgeberger project in the north of our 4 properties is actually the smallest. And what I wouldn't want to do is to bring in a partner at project level, and that might deter people from coming in on the other projects because they sort of see us as a tied house. So I think at Topco and a company which has more of a financial interest than an industrial interest would be ideal.
Okay. And so how does one sort of get that competitive tension going when there's any? Because you kind of got, and pardon my words, not yours, there's the kind of dumb money, which people are saying, well, you know what you're doing technically, but we can bring the money to the table. And then there's, I guess, sector-specific funds which may be interested. And then there's going to be industry players, whether that be traders or actual producers who sell into the market. So there's a kind of suite of types of cash available to you in that sense. So again, have you any preference? What's going to be best for your business in that sense?
I think at this point we need to be open-minded, quite frankly. We don't want to pigeonhole ourselves into one of those categories. I think it's a matter of looking what options are out there, and not only price-wise but conditionality around investment. It's pretty important in these situations. And we have to be mindful of the fact that we need to look after value for all shareholders, not just one or two of them. So you've got to get the package right, and it's difficult to answer your question is valid, but there isn't a clear black and white answer at this point. We need to be minded and evaluate them.
Okay, and then in terms of the total universe, in terms of peers, there are a few. We've had a few on the show in different parts of the world who took a great game, was as it's their job and their want. But what do you feel that your USP is? Is it the fact that you're in Europe, in a environment which is a net importer, and that people, and the fact that your costs and therefore hopefully your margins are significant? Is that what people will buy into? Are you concerned at all about oversupply in the market? Janssen obviously is a massive project, but for the reasons you said, it probably has some kind of restrictions there. So where's all this product flowing from and to, I guess? And do you just stick on Europe and the job done?
I think that there's two things you missed out. First of all, being based in Central Europe, in Germany, one of the richest countries in the world, means that you have infrastructure on your doorstep. We have an autobahn literally a few kilometers from the Omgeberger project. We have a rail siding not very far from the Omgeberger project. We have power and water in the area. So those are major hurdles for potash miners normally, because potash is normally a long way from anywhere. So they mean that our capital profile, $600 million, is not a small amount of money, but by potash standards, it's a small amount of money. So I think the advantages of being in a country with developed infrastructure are significant, first and foremost. We're also in an area highly industrialized within sort of a 200-kilometer reach. We have plenty of customers and plenty of industry to consume our product. So that is a fairly novel position to be in. We're also only 280 kilometers from Hamburg, which is our nearest port. And during the off season, for example, it means you can still continue to export to somewhere like Brazil if you want to during the off season period and keep your cash flow consistent through the year rather than being seasonal. So we are very well placed geographically to exploit all these advantages.
So are you saying in that sense you don't actually feel you've got a competitor? Is that what you're trying to say?
I think in Northern Europe, I think at the moment the competitor naturally would have been Belarus. And of course, they've become a little bit tainted with recent events. So I think that we're in a very strong position in Northern Europe to sell into that area of the marketplace. We have Highfield in the south, which will perhaps sell into Spain and to France. But Northern Europe being Northern France, Holland, Germany, Norway, all that sort of area is prime territory for us to market into.
Right, and sorry, I've got my banker's hat on here, which is that's all well and good now, but the sins of the child eventually kind of get forgiven, and Belarus comes back into the market. Would you be seen as a competitor for them? Would they be trying to undercut you, or would it be a case of there's room for all of the above?
I think that the deficit of demand versus supply in Europe is increasing because the KNS mines, which are in the south in Germany, are old and they're gradually shrinking and closing over the next sort of 5 to 10 years time frame. So the supply-demand movement is in our favour. Yes, I think if there was a magic wand and Belarus were to start selling back into Europe, they would be a competitor to us. But I think they're tainted for some time to come, quite frankly. And I think that the attitude of Europeans to wanting to be self-sufficient in these raw materials will mean that we continue to be the supplier of choice if that is necessary.
Right. Okay. You've got about $10 million bucks cash available to you now. Is that pretty much all allocated? And if so, what to? And when do you need to go back into the market for capital?
Yeah. The cash position is reasonable at the moment. Our burn rate of cash has gone down considerably because the high burn rate was the drilling we were doing in the first part of this calendar year. So that's behind us. Our overall overheads are run at about 300,000 Australian dollars a month. So there's no immediate sort of need to rush out and raise cash. But at the end of the day, we are an exploration company. Our only source of money is the marketplace. So there will be a fundraise at some point. But we've not indicated when that is, and it's not going to be in the next few months.
So, and did I get that number right? I may have pulled 10 million from somewhere else. Is it around how much?
It's a round number, and the 6.7 million was our cash position at the end of June.
Right.
We have options that will exercise before the end of the calendar year of about 4.5. So
got it.
Round numbers.
Okay. So that burn rate is actually quite reasonable at the moment. So where are we? So that may or may not be this side of Christmas, depending on market conditions.
Correct.
Okay. Ian, great introduction. Good story. I'm intrigued by the European angle. So I appreciate you making time to come on the show and tell us about it. And we'll stay in touch.
Okay. Thank you very much.